welcome to another YouTube video. I want to try and keep these as regular as possible, and basically what I want to show you is what I traded live on my Instagram username at Steluke, S-T-E-L-U-K-E. Yeah, so I want to go over it. It's a lot easier to explain it on here rather than the time constraints on IG. So first of all, two positions taken yesterday. This was the initial position, which gave just under 7%, took majority off at the 3% mark. And then also we had again a compound trade that went down to 7%, right? Now, what I want to do again is just show you the reasons for looking at these potential positions. And just looking at currently I'm on the 5 minute, all right? And obviously these are intraday trades. You know, it's personal choice. These type of trades, you can see price is melted. If I just go to the 15 minute, you can see that easily, if you were to hold something like this, you're talking 20% there. You know, even down to this level, you're talking 43% for the two of those, and price is still going. But we need to be realistic initially, and I would only advise holding these type of moves if you are a consistent trader already and you've bagged some nice profit for the week. But yeah, let's get straight into it. So normally when I'm looking for these type of trades, again, this is an intraday trade, I'm looking to see what the overall structure is, okay? And again, this is 5 minute, but you can see going back to 15 minute as well, it's very clear we are in this downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So ordinarily what we want to do on this, on obviously the lower time frame, is go with structure and then continue to trade in that direction. So we can see here we have lower low, right? Then we come for lower high, then we've got a lower low. I can draw that better, apologies. Let's just draw it on here. Lower low, lower high, lower low, lower high, and so on. So if I'm looking at this to say, and the reason I'm using this as my last lower high point is because this is where we've come up, we've had that nice pull up, and then bang, we've had that big bearish move, bearish engulfing, evening star formation at the top of that, indicating a move to the downside. So for me, I need to be sure that I'm at least covering these highs here. There is a little bit of a warning point here, to be honest, but I don't see any relevant sort of areas of imbalance around here that I need to be concerned about. Therefore, I'm just going to concentrate on this, okay? So you always want to make sure that when you're taking these trades, initially your first trade, the stop is going to cover the previous high, because price can come up, and you can see on this occasion, if my crosshair is here, where the wicks are, price has just come up to that area again, but it's just slightly closed below this previous wick here. All right, so let me just show you that. So crosshair on the top of that, see where price has come to over here, just obviously rejected that area just below, making a lower high. So when we make a lower low, we have 75% chance of a lower high, lower low, 75% chance of a lower high, lower low, 75% chance of a lower high, and so on. So this is what I'm looking for. Now, I've got my area of imbalance on here, which is actually on a 1 minute. To be fair, you could even use a 5 minute one here as well. Works beautifully, price come up, stab into that area. And also, again, a reason for taking this trade is because when we have had that snap down, we've broken structure here, broken structure here, broken structure here. So again, even on, if we were to go down to the 1 minute, and you can see this just on the 5, on the 1 minute, we are making higher highs and higher lows. Then this point comes bang and breaks, okay? Draw that pattern down here, going like this. Then we have this move down, which is a higher low. Then we make a lower high, and then we snap. Now, in these instances, then what you want to do is wait for price to come back up to your area, covering this high here, to then take the short down and then just ride that sucker all the way, right? And again, you can catch trades like this every single day. Now, so if we've broken our structure point, so BOS, break structure, whatever you want to call it, on the 5 minute, 15 minute, we know that this is the other structure point that's broken. That's the main structure point on the 15 minute, created the new low here. So if, again, we have 75% chance, given that we've now made a lower low, of having a lower high, then what I want to do then is capitalize on that and try and get in at the highest possible point. So prices then come up, and because I've already had my breaks of structure, I'm quite happy to enter that trade when we come back up into this area. Now, there isn't anything that ordinarily you have to look for at that point. Again, this is an aggressive entry. I do talk about lower time frame confirmations, but in this setup, because we've already had the breaks of structure on the 1 minute, on the 5 minute, on the 15 minute, and also given how we closed previously on the last day, if I just go into this daily here. So this was the candle here. We had that nice bearish engulfing that's engulfed 2 candles, wick rejection to the upside. And on the 4 hour as well, you can see bang, we've closed below with the EMA and taken out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 previous candles with 1 candle showing that bearish momentum. So when we break through the EMA, we come back up and retest. This area that I've got down here at the moment, this is my area where I'm looking for a potential long position and a potential bounce. So I can cover another YouTube video on that. But my 15 minute is lining now up with my 4 hour and daily, given the bearish momentum. So price has come back up, and therefore that's why I've entered. Now, again, stops are above the highs. Now, in terms of targets, again, we had 3% initially, which was around here. So you would have been out of that trade if you'd gone for 3% within a matter of minutes. However, the reason I had both these targets here is because what I then like to do if I'm going to hold a trade for a longer period of time is target the previous low, which is here. Now, you'll see that I haven't gone right down to the bottom of this previous low. That is a session low for Tokyo, for the Asia range. The reason I've done that is because sometimes we get a bounce from this area. Therefore, what I want to do is just take my profit just above this to make sure that I'm not getting, obviously, a bounce, prices coming back up and taking me out. Believe me, it does that. So this is why you've got to be realistic with your targets. So I'm taking the profit just above the previous session low here. And then first of all, you see price came halfway. And when price comes halfway down, then what you want to do as well is move your entry to break even, just to make sure that you're protecting your capital, because risk management is key right now. So that's entry 1, okay, which is given just under 7%. So we can now remove that. Then looking at the second compound entry, here we have, again, if I just go down to the 1 minute, let's go to the correct point, bear with me. People say 1 minute's a load of noise, but actually you can get perfect analysis on the 1 minute, works beautifully. So this is what the 1 minute looks like. And you can clearly see, again, at looking at structure, higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. So again, if you want to wait for that lower time frame confirmation, and you can see break of structure 1, break of structure 2, that one here is a double bottom, and at a double bottom we have stops, meaning that we are likely to attack that area. So that's a confluence for us. Actually, you can probably drag it across for a little bit of a triple bottom. So meaning that price is going to come and attack that area to collect people's stops that we're going long. So that's a confluence for us to go short as well. Now, you'll see on here, so what I've done, I've just used the 5 minute on this. And because I already had my entry here, so first entry was around, just quickly put it back on. Now this is different for compounding. So my entry was around there, right? On the previous one, stops were like 6.5 or something like that above, okay? So when you're compounding, because this one was at break even, I was then, and because we had the breaks of structure, again, you can see them on here, one here, and there's our triple bottom there as well. You want to then enter, but make sure that your stop loss is where your entry was previously for your first trade. Because what we don't want to be doing is ever risking more than 1%. If I extended my stop all the way up here, then potentially I'd be risking 1.5%, which I don't want to do. So stops around there. So if price does come back up, that's going to take me out at 1%. This one's at break even. So I'm still only going to lose 1% for the day, all right? Which is the max you ever want to risk on your account. Now you can see as well, that price on this has just missed the tap of this area. Okay, you can use a GAN box, we can use whatever. Sometimes I use a trend line to make things less cluttered, whatever. But you can see very clearly there that we've just missed that if I zoom in to that area. So a lot of people will say, well, hang on, how did you still get into that trade? So what I do a lot of times is I'm not too hung up on waiting exactly for price to come to that area. You can see there that we are 0.6 pips away from entry. Therefore, I just go in. Normally go in about 1 pip max in advance, just because again, that takes into account spreads. If you were to have a sell order on this and it was exactly there and price tapped it, it wouldn't put you in. You'd always have to put your entry 1 pip in advance. So I tend to go in 1 pip in advance. And to be honest, by the time, so 1 pip in advance was there. By the time I got to my MT4 to then press sell, it had already wicked a bit higher. So I actually got in perfectly on the top, which was 0.6 of a pip before entry. And then you can see prices absolutely dived and melted to the downside in the very short space of time from entry to here. 40 minutes to give you that, obviously nearly almost sort of 8% trade. And yeah, that's basically it. Okay, intraday trading can be so simple. As long as you understand structure, then obviously it'll put you in a good position. So again, just to clarify, we're looking for higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low, retest to then go short. If I draw that exactly as we see it on here, honestly, it's just perfect, right? Bang. It's the same pattern, the exact same pattern here and there. So if you nail structure, and I'm happy to do some more videos on structure if you want them, just comment below and what you think would be helpful in the comment section. And then obviously I'll get onto those videos. This morning I did say that what I was looking for was a potential long from where we are now down here. Ordinarily what I want to see in this scenario, if I just go down to the 1 minute, right, is you can see very clearly, well, let's do here, lower low, lower high, lower low, lower high, lower low, currently making a lower high. So again, what I then want to see is like just a break of an area. See price give some bullish momentum to then justify a retest entry to then go long. Okay, wait for confirmation. So that's what a lower time frame confirmation would look like. But I hope that all makes sense. Of course, if you want to learn all of this in depth, I do step-by-step videos in the Forex Trading Academy. Check out the website, which is in the bio. There's 66 step-by-step videos on there. We have the Discord trading community as well. Great community of traders, some fantastic results. A lot of people getting funded through obviously prop firms, trading now, some up to over £500,000. Using these strategies, and yeah, if you're stuck, you don't have to be. The education is there. You then just got to take action to obviously, improve the education and understand these strategies. But I promise you, if you take your time to study, you will be successful. So have a great day. Yeah, where are we? Thursday. Have a great rest of the trading day. Great day tomorrow, and I'll try and put some more videos up soon.